So welcome everybody to the session, Building a Consumer Protection Assessment Framework for the Off-Grid Solar Industry. So today we're going to be doing a catch-up with where the off-grid solar sector is at with respect to developing a consumer protection framework. We have three excellent panelists. We have Sarah Mujabi from Greenlight Planet, one of the market leaders that is providing services to customers across Africa and Asia. We have Alex Kanyonga from the Lion's Head Global Partnership, who's going to be giving the investor perspective, and Lucia Spaggiari, whose expertise from the MFR as a ratings agent supporting the sector is second to none. So I'll start off with a quick introductory presentation, and then we're going to go into a panel discussion to hear from our experts. So please, I'd love this if it's as interactive as possible. Put your questions, comments, chat in the box, and we'll try and pick them up as we go. And yeah, firstly, I'll point out that I am not Rebecca Rhodes, as this slide says here. The more astute of you may have realized. Rebecca is unfortunately not well today, so I'm stepping in at the last minute to take us through this. And yeah, a pleasure to be here today at the European Microfinance Week. It's a shame, of course, that we can't be together in person in Luxembourg. I was at the event in November 2019, and it was a pleasure to spend more time with players in the financial inclusion space. So yeah, pleased to be here again, and look forward to meeting again in person in due course. So yeah, I think it's really interesting for GOGLA to be here at e-MFW because we look up to the financial inclusion space as kind of our closest neighbour. It's trying to reach the same same individuals, same consumers in a lot of the same markets, with a lot of the kind of same social and impact goals. It's around providing, life-changing products and services to, some of the poorest and hardest to reach people in the world. And I think there's a fantastic complementarity between, off-grid solar, providing access to energy, and financial inclusion. And I see these two sectors moving increasingly together. So, we're really pleased to be here and making these links. So next slide, please, Pug. So a quick introduction to you about the off-grid solar sector. It currently serves more than 420 million people globally. And this is from the entry-level solar lantern to larger solar home systems that are increasingly selling fans, TVs, fridges, radios, up to kind of productive use and entrepreneurial technology such as solar water pumps, cold storage, fridges, agro-processing machinery, etc. And yeah, 420 million people. The majority of that comes from lighting and phone charging, but we're increasingly seeing the trends towards larger solar home systems with appliances. And this has really been enabled by the pay-as-you-go technology, which has enhanced the affordability of more expensive products for many people. GOGLA, who I represent, so I'm Drew Corbin, the head of performance and investment at GOGLA. We're an industry association with more than 200 members working along the supply chain, as well as investors of different flavors. Our mission is to support our members to grow profitable, sustainable companies that provide life-changing products and services to people living without access to electricity. We're based in the Netherlands. We're a team of 25. We have an office in Nairobi, Abidjan, and a representative in Mumbai as well. We work on market intelligence, policy and advocacy, standards, tools and guidelines, and networking and events. And please check out gogla.org if you're not familiar. Next slide, please, Buck. Cool. So the advent of pay-as-you-go or asset financing has, like I said, been a real game changer for the industry and puts more powerful, more impactful products within the hands of many more people. Of course, it also introduces additional risks for consumers and for companies. It's moved from being just about the product risk to also the finance risk and the service risk as well. So we established the Consumer Protection Code to help companies map these risks and address and monitor them. Of course, this audience knows very well about this consumer group and some of the vulnerabilities that they face and some of the characteristics and challenges of trying to meet them with financial products. Many companies are doing this at scale, so working at countries and multiple countries, with large operations, distribution networks, rural agents networks, that of course presents opportunities and challenges. At the moment, off-grid solar is not regulated as a financial industry or as an asset finance class. The industry has stepped up and is self-regulating on consumer protection. And next slide, please, Puck. We have developed the Consumer Protection Code, which has really taken a lot of inspiration from the SMART campaign, and how that is defined with the principles, but also the framework of assessment behind it. So we've done a consultation with our members, the Consumer Protection Working Group, to define 6 principles, which you see here, as well as I think 37 indicators, which map onto these, which represent a measurement framework that is being used at the moment for self-assessments, and in the future for third-party assessments. So next slide, please, Puck. So yeah, we started this journey back in May 2017 at the last e-MFP event in November 2019. We launched the principles, and shortly after that, the self-assessment tool. We ask our member companies that have relationships with customers to make a commitment towards this code that signifies that they will endeavor to achieve this standard of practice for their consumers, and that they will use the self-assessment tool to monitor their performance and develop action plans to improve. And we've also created an endorsement that we encourage investors and funds to endorse, which signifies that they are aligning the Consumer Protection Code in their tools and practices and supporting their investees to achieve this standard. We now have, I believe, around 75 commitments and endorsements combined. So, it's now starting to look like quite a large proportion of the PAYGO industry is using these standards and kind of aware and seeking to improve their practices. We also see that a number of funds in the sector are using this in their eligibility criteria and their monitoring. Notable ones are the Energy Access Relief Fund, set up by Acumen and with many MDBs and DFIs. The Beyond the Grid for Africa is using it in their, I think it's a $50 million results-based financing scheme in 4 countries. And yeah, we see the trend that more investors and funds are aligning with it. What we're on with at the moment is to develop a third-party assessment scheme, which we're going to talk more about today, as well as developing a kind of a suite of tools and knowledge products to help companies and investors to work with the code and improve the standards in their organizations. Next slide, please, Puck. Yeah, so this is the framework we're looking at. As I said, we have the self-assessment tool is available. You can find it on the GOGLA website, and we require any company that has made a commitment to do a self-assessment on an annual basis, and we encourage them to share it with their investor and have investors and have a dialogue around that. Next step up is we're looking at developing this third-party assessment tool, and we're doing that with, we'll hear more from Lucia as to where we're at with that. The idea is to develop a commercial service that can serve the industry in perpetuity. And then in time, move towards a ratings scheme, where companies can, demonstrate where they're at and the value and impact that they're achieving. At the same time, we're looking to develop a consumer survey tool. We're working with 60 decibels to set up a mobile phone survey tool, so that they can go out and collect consumer voices to bring in that perspective for companies and investors. So yeah, we're on this journey, yeah, like I say, we've the SMART campaign in the financial inclusion space has been kind of our inspiration and learning, and we very much appreciated support and insights from the industry as we look to kind of adapt it and kind of accelerate our own practices, and make sure we're aligned with what's happening in financial inclusion as these sectors get closer together. Cool. So next slide, please. Yeah, that's all the background from me. So now we're going to delve into the discussion, and I'd like to start by asking the three panelists to introduce themselves. Lucia, can you go first, please?
Good morning, good afternoon, everyone. This is Lucia Spaggiari, Innovation Director at rating agency MFR, specialized in inclusive finance and lately access to energy. Pleasure to be with you.
Thank you, Lucia. Great to have you here. Sarah.
Thank you, Drew. My name is Sarah Mijabi. I am the Vice President for Risk, Greenlight Planet, which is an energy company that we are focusing on pay-go, and also we also customers buy upfront. My role is to make sure globally that our risks are identified and managed. I have a background in microfinance and banking, mainly focusing on risk, statistics, and also data. So I'm very excited that we're talking about this because it's key. It's a key area that I have to check every time to make sure that we are able to comply and also meet some of the standards that are being set in terms of compliance and just customer satisfaction. So thank you.
Thanks very much, Sarah. And Alex.
Yep. Hello, everyone. My name is Alex Kanyonga. I am an investment director at Lionshead Global Partners, where, among other things, we are fund managers, and I focus on the Facility for Energy Inclusion in the Offgrid Energy Access Fund. And as the title of the fund says, we invest in companies within the off-grid energy sector. And this would include solar home systems and mini-grids, where the end consumer are people in underserved communities. And again, this topic is one that very keen for us and our investors, and looking forward to contributing. Thank you.
Thanks very much, Alex. And yeah, again to participants in the audience, please drop any questions in the chat or Q&A as we go, and we'll certainly get to them. Yeah, as moderator privilege, I will go first. And Sarah, Greenlight Planet were one of the early kind of pioneers in defining the consumer protection code and adopting these tools in your business. Can you share a bit about kind of how that journey has been with you? From first making a commitment and using the self-assessment tools and kind of following your annual assessments. How has been the kind of consumer protection journey with Greenlight Planet, and what have you learned in those years?
Sorry, I was on mute. Great. So in Greenlight, I think for us, we are very progressive in trying to usually identify ways in which we can improve on our customer experience and customer satisfaction. So when this came on board, we were very keen on trying to understand how, the value add in the process. And one of the great things that really helped is that there was a buy-in from the senior management to just roll this out. And this was based on the fact that we had already foreseen the benefits that we'll get from just trying to assess internal process with regards to how we treat our customers, and also just ensure that, additionally, when we look at our values, most of them align with what we are looking at in consumer protection. So it was a very easy, an easy uptake for us to just try and test ourselves and see which areas we can improve. Secondly, we are very abreast, well abreast with the changes that happen in the market. And we know that there's a lot of regulation that will come with data protection. And the good thing is that, consumer protection also touches on certain aspects of that. So it is a very important thing. It was very critical for us to try and start checking ourselves within that framework and see how do we align with regards to consumer protection as well as data protection, and what are some of the best practices we can learn from some such type of, initiative, to make sure that we are in a position that when such regulations come on board, we can easily be able to even become part of the people who sit on the table to drive, such type of decisions in this sector. Also, one of the things that I would like to mention about the consumer protection is that it brings a different perspective in mind of a business, in the mind of, an organization, that, every time when we look at processes and procedure, we always have our, we want to make sure that we are the beneficiaries. How will this benefit the organization? How will this work out for us? But, it brings us a perspective of, what about the customer? What is the customer journey? How does the customer fit in this process? What are we missing about the customer? And so for us not to always underrate or overrate ourselves, we embarked on just checking ourselves against the CPE codes and principles, just to make sure that that aspect of the customer is taken into consideration. I think, just to sum it up, our journey was easy. We took this up and we wanted to make sure that there's value add both for our internal processes and the customer experience. I think there was another question you asked about self-assessment, or that one I'll go later.
Yeah, maybe to think about the self-assessment tool and how you've used that, and whether there's been any kind of any tangible changes that you've made as a result of using it.
Great. So one of the self-assessment tool was quite great because it gives it has different codes that touch on different things, how we treat our customer, talks about affordability and pricing. I mean, it talks about certain things that are very key and critical for a business like ours, a pay-go company. And all these things will almost touch on some level of performance or some level of processes. So one of the things I liked about this tool is that, when we had it on board, there were iterations on how will it fit in our market, and we had those iterations, and we came to a conclusion of how do we use it to test our segment, which was a great thing. Most of these tools are very rigid, but I like the fact that there was open-mindedness when you were working on this tool, and they wanted really to understand how will this tool add value to a pay-go company like ours, and how can we benefit from this tool as well. So there was that, almost meeting at the middle, but at the same time not losing the whole essence of trying to check on consumer protection. So that was quite great, because then it gave us an aspect of trying to refocus on what exactly do we want to check in our business, how does it fit in consumer protection, and just also mapping out some action plans on when do we get to where the consumer protection, there's a standard that has been set. Are we there now? If you're not there now, we map out a plan to get there. So it almost gave us a roadmap to get to a point whereby today we can easily ask an external assessor to come and check. If we didn't have that first iteration or the first check, we wouldn't be comfortable today to call in an external assessor to come and check. The other good thing is that it gives us an understanding of looking at the customer and putting ourselves in the shoes of the customer. Out some things like we just used to assume, like, we don't have to explicitly say about our pricing, just checking if you're fair or not. We just wanted to make sure the pricing is there. But the fact that this tool takes us to another level of checking our contracts, customers understand, are the customers treated fairly? Do we have a process of checking that? We put in processes that we can check the customer life journey from the time they're on board to the time they finish up paying up the product, because they pay it on a pay as you go. So I think those are key things that I would say that were very critical. One more thing is that we are a paygo company, and portfolio quality is very critical for us. Though we can't really attribute some of the measurements or some of the results of portfolio quality, but one thing we know is that customers who are satisfied, there is a positive correlation with good repayments. So when you look at it in that perspective and trying to make sure that you have put all those steps in place on ensuring that we check the customer understands the product, customer is given all the necessary information, there's customer's data is protected, and the interaction with the customer is made better by the consumer protection, then you find the satisfaction levels, they go high, and that translates to some level of improvement in repayments, which I think is also an aspect that we wouldn't want to rule out, especially the fact that in consumer protection we are told that we have to check over indebtedness, which I don't know if most people do. We have to see that burden on the customer. So, some of such type of initiatives, then you start thinking about, these are customers, advancing them to this product, they're supposed to pay, they have to pay until they finish, but do we know if they have other products that will burden them, or this one will burden them in terms of, the way they can pay, as well as just making sure that they are not overburdened. And, some of the customers sometimes, stress and the rest could come into the customers' life. We've seen in India in the past, people committed suicide because of being overburdened. So these are some of the aspects that now they bring in, that we do that sense check to make sure that that is also taken into consideration as we give out our products.
Yeah, thanks very much. Great to hear your experience, and to know that the principles and the tools that help really put you in the shoes of the customer and think through their experience and perspective. And we'll come back a bit to some of the kind of the strengths and the weaknesses in the industry and how that manifests itself in for customers later. But for now, Alex, I'd like to kind of continue this thread around the kind of the CP code and the tools that are there in the framework, and just hear how you as an investor have adopted and are working with these tools with your investees.
Yeah, thanks. It's really nice and encouraging to hear some of the feedback and outcomes from Sarah's presentation. With improvement in repayments, that's my face just glowed a little bit. But yeah, to your question, I think it's still a bit early days. I think what we have right now presently is a voluntary sort of system where there is, a system in place where companies go in there and voluntarily do the test themselves to see how well they score. But for us as investors, and goes all the way back to our investors as well, it's something that is so dear and close to us that we have it in our loan documentation, where we require all borrowers or potential borrowers to, number one, adhere to all the protection principles that are there, and number two, to commit to all of those. So it's a requirement that we have, and it's really encouraging that some instances we find some potential borrowers from the solar sector coming to us and not being aware that there is such a consumer protection principle. But it's a requirement that we have, that they have to sign up, and it's something that you mentioned a little bit earlier. Some of the other funds that are in the market, the Energy Access Relief Fund and others that are also having this as a requirement. So it's a growing system that more and more investors are having it as a requirement. So that's number one. And number two, I think moving forward, we'll have a lot more going into this, and depending on where this ends up, if it's going to be a rated system, we'll probably also incorporate this as part of our due diligence, and it's probably going to have knock-on effects on how the loans are going to be structured, payment terms and things like that. So it's something that we hold very closely, and we are number one right now incorporating, and we'll continuously make it more and central to the way we do business.
Yeah, thanks, Alex. That's great. So to understand, so you make a requirement for your investees to have made a commitment to the code. Are they also sharing their self-assessment tools with you? And is there any particular part of that, or any of the principles that you look at closely and monitor? I mean, For example, Sarah was talking about over-indebtedness being a concern for some. Is there any areas that are of particular importance for you?
Yeah. Looking at all of them, I think they sort of all tie together. There are some that are fairly sensitive to us. Data protection is one that, if it's not adhered to, there are laws that touch on those in so many jurisdictions, and those laws vary from one to the other. So all of them are very close to us. But to your earlier question on whether we require them to share the results of that test with us, currently, no, we do not. And the reason is, number one, it's voluntary, and people can score themselves to portray that they are doing really well, and that's why we're very keen on these third-party assessments, because it's going to be independent, and that's we are leaning very strongly towards, let's take that direction where it's independent, it's objective, and then we can rely on the results from there.
Cool. All right. So that independent verification of the results is a key thing for you as an investor, which is a great segue into first question to you, Lucia. So obviously you're a partner with GOGLA and working to develop and pilot this third-party assessment scheme. Can you say a bit about what that entails and kind of what you've brought across from the financial inclusion space for Paygo Solar?
With pleasure, Drew. Let me please start by thanking Greenlight Planet and also the other two participating companies to the pilot to make this possible. And, opening your books and your shops and your kits is already a great sign of commitment and transparency, which is not to be given for granted. So it's been a pleasure to partner with GOGLA and other stakeholders in this exercise. What we did our best to bring from other experiences in financial inclusion is to recognize some similarities, but also the differences. One thing which is always a good thing to do is to set the bar at a right level, which is high enough to ensure the credibility of the scheme, but at the same time accessible enough given the stage of development of a given industry to ensure feasibility for companies and buy-in. It is also important to mention that it is very interesting that consumer protection third-party assessment comes at such an early stage in the Paygo industry as opposed to the microfinance one, which is great in terms of integrating and hardwiring this since the very beginning, but which also means that it is important to keep the priority on the gap analysis and identification of strengths and weaknesses for the purpose of driving improvement for now, more than with the purpose of attributing a rating, which may happen in future for companies who wish to graduate to that level. So what we brought from microfinance, because it is similar, is things that are useful when you work with the bottom of the pyramid, when there is value that you sell and that is repaid over time, and that are relevant for an industry which is bottom line. These are, we believe, the key pillars of shared purpose of the two industries. At the same time, Paygo is very specific in which it is asset-based, unlike microfinance, and with a very specific asset, which is for consumption purposes, but for essentially, not fully, but for a very specific consumption purpose, which is the access to energy, a very essential one. Also, we note that compared to microfinance, Paygo goes deeper in rural areas by definition, and reaches a population which on average has even less capacity to pay. So it is a very interesting journey. You can imagine a very long value chain, which is also a difference compared to microfinance, where you have the goods that are sold, produced in Asia, And then you have some of the board members in Europe or in the US, managers, employees, and consumer-facing hired agents working in towns and in deep rural areas of sub-Saharan Africa. So along this very long value chain, we find it a very interesting challenge to align interests at all stages of the process and ensuring that the intent is translated into the field practice, which is not easy, but it is a very interesting journey. I am also happy to share now some emerging strengths and weaknesses, if this is a good timing, Drew, or happy to do that.
Please do that. Yeah, continue.
So, look, this is very emerging, and the first thing to mention is clearly that each company is a standalone and is very unique in its business model, strengths and weaknesses. However, we are happy to share some very initial findings. So some areas that we see as relative strengths include transparency. Please, Puk, feel free to move to the next slide. Product quality and fair and respectful treatment. To give you some examples, we anticipated that it was potentially difficult to manage the printing of contracts in very remote rural areas, but this is in reality a strength, and customers do receive a copy of the sales agreement. There is also, when applicable, a good disclosure of the pay-go total cost versus cash price. One area of potential improvement may be the communication of agents, which is very challenging. There are lots of trainings and tools made available by the pay-go firms to ensure that this goes as smoothly as possible, but the rural distance is just very challenging to make sure that this happens in practice. So that, for example, very precise scripts for agents with what they must mention verbally may help, given the variety of languages. One thing which is a strength, though, is the independent check on the customer's understanding of the terms and conditions that is done by the call centers, independent of the sale agent, which is, in our view, a very good practice. Product quality is also a strength, as products are certified under the Verasol database. User manuals are clear and include visual aids. The user interface on mobile wallets is also easy to understand. And an additional strength is in terms of fair and respectful treatment, where by nature, the fact of having flexible repayment options before the kit is repossessed is an important element, and a different one than microfinance. Even if the repossession may come at later or slightly earlier stages, depending on the companies, and there may be recommendations in some cases on that front. The fraud prevention system, which is also very important given the long value chains, also appeared as overall adequate in our view to prevent and detect fraud. One potential area of improvement may be the formalization of acceptable and unacceptable, very concrete behaviors from agents, again, on the implementation side of things. On the other hand, a relative area for improvement is governance and management, responsible sales and pricing, and personal data privacy. Training of agents may be even enhanced with more practical tips and scripts and rules and do's and don'ts to follow to make sure that consumer protection is implemented even more effectively. the assessment of the customer's ability to pay is not an easy area. It is not easy to do this, and it is not easy. There is no golden rule, but potentially more testing and efforts may be invested in this space, which, as Sarah said, is very important for the success of the firm. We were very pleased to see that the bonus system of field agents do include both the sale and the portfolio quality side. A potential area for thought there is to integrate those two aspects even better, to cap the sales bonus for relatively low levels of collection, potentially. For data privacy, as Alex mentioned, an important aspect. You know, paygo firms are busy doing many things, and so this is just another one on their table. But over time, it may be good to make more systematic the assessment of the compliance with the national regulations. Kenya Act, for example. On the other hand, we positively noted that no reviewed firm sells any data to third parties, which is a positive note. And to close with customer service, where both areas of strength and potential areas of improvement are noted, the warranty period is a strength in general. There is a variety of customer service functions that are available to support customers in many ways, including technical and troubleshooting. One thing that is more difficult to do and complex to arrange in advance is the service continuity plan in case of bankruptcy, which is potentially important for clients, but also not an easy one to discuss, and not only for consumer protection, but also for, you know, collateral funding, etc. Another area of potential work in the future may be to further segment customer feedback, to analyze satisfaction by region, agent, gender, repayment amount, etc. To Sarah's point. Potentially even more direct questions about product quality, repayment terms, and repayment periods may be enhanced. And regarding e-waste, the communication to clients of e-waste and safe environmental disposal of kits does not seem to always be uniform across customers, but for repossessed or faulty products, there are good partnerships in place between the paygo firms and options to dispose in an environmental friendly manner. Thanks, Drew.
Yeah, thank you very much, Lucia. Fantastic to have an overview of all of these different areas of the consumer protection codes, and have an understanding of some of the strengths and the weaknesses. Was there any big surprises for you as you've done this in terms of, you know, those strengths and weaknesses? Anything stood out to you that was unexpected?
We were positively surprised by transparency. There's a lot of effort in that sense. It is a journey, right? So there are some aspects that can be improved, such as a key fact sheet, such as the GOGLA example that you have developed. But still, we believe this is a strength, and it is not easy to make this a strength when you work in deep rural areas with hired agents. Another positive, very positive note and surprise was how effective, if well structured, can the call center interviews be to not only control for consumer protection, but also for fraud risks. Yes, otherwise, look, given the stage of the sector, it is, you know, the one thing that we have never heard, and that we would have been worried if we had heard, is if we had asked risk managers, CEOs, and other managers what are the consumer protection risks, and if we had heard back that there are no risks. No, there is awareness. We are increasing further the level of detail on what are the strengths and weaknesses, and there is commitment to improve, which for the initial and young sector that it is already a great starting point.
Yeah, fantastic. Thank you. Sarah, I'd like to speak to you about one of the greatest kind of challenges and weaknesses that Lucia mentioned and has popped up on previous research around this, working with rural agents for the sales, marketing, and after sales. And of course, it can be with large operations in many countries, it can be difficult to do the the recruitment, the training, the management, the incentives in a way that is achieving the kind of the scale and the ambition of impact that we want, but whilst delivering good outcomes for customers. How do you try and find that balance at Greenlight?
One of the things is that we have a very stringent way of agent selection. There are key things that we look at when you're looking for agents, and the agents have to meet the minimum requirement before they join. Already this sends a psychological, kind of, behavior that, this is a serious organization, and, they're also doing reference check. The other step is just that there's very thorough training of agents in terms of what is expected of them. What are some of the consumer protection, principles that we expect them to adhere to? What are the goes and no goes, in terms of rules? What does it mean if they, for example, fraud, for example, treating customers unethically? What does that mean? One of the key things that is very clear to us is when that happens, you are just deactivated. The other thing is that we have a code of conduct that we give to agents, and this is done at the point of onboarding. And this really outlines one of the key things that we wanted to ensure in the code of conduct is that yes, there's the value, the values for Greenlight, but one of the other principles is the consumer protection, because we want to make sure that whatever we are putting in process is also understood by the agents. And then the other thing is that since the agents are usually very remote, one of the things we have tried to do is to try and monitor training through a centralized system. So all agents are already logged in and we see their training journey. So we are able to, we have apps that we use on the phones for agent. We ask them to log in and just retrain every time we do retraining. The other thing we do also, just to make sure that this is done, is we do frequent customer surveys just to see how our customers satisfied. What are some of the things that are recurring from a certain agent or a certain area or a certain region? How do we replicate some of the best practices we get from these surveys from other regions? And this continually help us to revamp our processes and in agent engagement. And from these surveys, outrightly we don't tell the agents that they have a risk of being let go, but it's always just to make sure that these are retraining. So they have to log in and retrain, and then we start that journey again and just work with them. So we're trying to put in controls and mechanisms to have visibility of agent behavior through surveys, have visibility of the learning curve of agents through the platforms that we use, and then have visibility of agent responsiveness to some of the trainings we are doing through their phone and apps that we have set. So those are some of the ways we are trying to do this.
Yeah, it's a major program of work, I can see. And as a VP of risk, what's the thing that keeps you up at night in terms of all these consumer risks? And what's the one thing that you struggle with most?
I think one of the things and the risks that we have is data protection, I would say again, especially when you're dealing with remote teams and agents in the field. Of course, you can have your standards at the centrally or at your AHQ or headquarters, but to be able to clearly know that is being adhered in the field is very, very difficult. The fact that these agents are able to log into our portal, get the customer information upfront, you wouldn't know how much that information is shared. So it's something that we really are very keen to make sure that we continually check. We cannot say that we've mitigated that risk 100%. It's something that we need to think through outside the box and see how we will manage agents wherever they are and to still mitigate the risk of data protection. So I think that is one. The other one is just misinformation of customers. So I like the fact that consumer protection brings transparency, and there's the whole aspect of what product the customer is getting, what exactly are the specs of the product, how they will pay, and what is the term of payment, and even the pricing itself, which is very important when it comes to portfolio quality. We are doing pay-go. Customers who understand what is expected of them and obligation pay very well, unlike customers who don't know anything about the product, because that's when they tell you, I didn't ask for this, I got this. So there's a lot of back and forth. So if we get it right from the onboarding set, where the customer understands what they are getting into, what value the product is going to add, what they're expected to pay every day, what is the payment mode of payment, and what does it mean not to pay, and what is the long term, what do we expect them to, when do we expect them to complete the payment? It really aligns very well with seeing some level of repayment speeds coming in from such customers. So for me, those are two critical things. You have to get it right with the customer, and you have to protect the customer's data.
Yeah, fantastic. It's in the industry, we've spoken a bit about how consumer protection and credit risk management are two sides of the same coin. And kind of, as you said, if you do well by the customer, they understand the terms, they like the product, they have good service, they're more likely to be satisfied. Customers that are willing and able to pay, right?
Yeah, one more thing, you also have to get it right with the agent. I forgot that. But agent is a very big, part of the puzzle. So if the agent, you don't get it right with the agent, that is also a problem. And that's why you find that we try to measure the agent incentive by making sure whatever they sell, they're able to collect. So you incentivize those two aspects of their, of their day-to-day productivity or collections. So that's the other way.
Cool. We have a follow-up question for you, Sarah, in the chat from Isabel Barres. Can you please expand on the challenge of data protection? Is it more from a data privacy or a data security perspective, or both? And in the meanwhile, I think, in the meantime, I think we have to say goodbye to Lucia, who's off to the closing plenary, I believe.
Yeah. Pleasure. Thanks to everyone. Looking forward to connecting soon.
Much appreciated, Lucia. All the best and speak soon. Thank you. Sarah, back to you. Is it about privacy or security or both?
Yes, when I talk about data protection, I'm not talking about the security part per se, because security, we have we have data centrally, managed, and we have key controls, penetration testing that we do to make sure that no one can be able to hack in or try to get data. What I'm talking about is, like, for example, just simply looking at it just from a layman's point of view, where an agent is supposed to do some collections, and they give their sister the list of customers to call, and we usually try to give in terms of data protection, one of the key things, as long as the data is identifiable. If I'm able to link your name to your phone, to your ID, then that is an identifiable data. So that's where we say that it's very hard to balance that, especially when you're having third-party agents. So we try to do this with the code of conduct that they sign, but you can never be too sure, since sometimes there's also pressure to make sure collections come in, and this pressure also for sales. So the agent can try and get a relative asking them to call for them. These agents also have some other businesses they try to do. So sometimes it's very hard to balance in between those. So I'm talking about the privacy part and not much of the security. I don't know if I answered your question. I hope I did.
Yes, thank you. Cool. In the consumer protection program for GOGLA, we're going to be doing more on data privacy in the coming months. So yeah, we look forward to engaging on that and watch this space. It's certainly I think a complex and challenging area, and I dare say one that many companies have not fully thought through and got to grips with. Alex, I'd like to ask this question to you as well. Which of the consumer risks or industry weaknesses keeps you up at night as an investor? Which is most pressing?
Yeah. Well, I don't know which one to pick. They are all really super important. But if I was to pick, just one or two, I think fair pricing is one that is very close to us. And I say that because the mission, the reason why we fund companies is to make sure that people get access to energy. That's sort of the bottom line of why we do what we do. And one stumbling block is when the products are priced out of the range of customers. And it could be because there is a lot of pressure to achieve profitability. It could be that there is a lot of pressure to get investor return and things like that. So that's one area where we look at unit economics when we are looking at companies and what they do, and we try to work with companies to get that right, whether it's solar home system companies or it's mini-grids, to get that we are funding them to make energy accessible and energy affordable. So that's sort of one bottom line that we look at. Data privacy is also another one that is coming on really hot. Especially in Kenya, I'm based in Nairobi, and it's a really big topic where, people are given confidential information about their phone numbers, about where they live, and if this data is not handled properly, then it could mean, it could have lots of negative effects on it. So it's an area that we keep very close to us. And if I could touch on, some of the points that Lucia touched on before she left. I was very keen on the areas that have weaknesses, because those are the areas as investors we are able to sort of focus on and concentrate on. We have technical assistance funds that is attached to our capital, and we are able to deploy that to address specifically those areas. And I think pricing is one of them that was touched on. And we can, we have worked with off-grid solar companies, especially the earlier stage ones, to work on their financial modeling, to work on their pricing strategies, to work on their loan portfolio pricing, just to make sure that everything is tied to make sure that, number one, they are able to achieve whatever targets that they set for themselves and have investor value, but at the end of the day, also make sure that the products are affordable. There is also one that was touched on, which is privacy. Again, that's another area where we can do a bit of work with our technical assistance, and we are doing. Training is another one. Sarah touched on training. Training is another where we can deploy some of our TA to go and help either put together the trainings that are required, or finance partnering with these companies to make training available and accessible to the sales agents and to the company, even at the management level. And we can also, do market studies where we say, okay, fine, these are the big points. Here is a manual. I use a manual that can be, open source, and all companies can go in there and see, these are some of the areas that, there's general weakness, and these are some of the areas, these are some of the things that we can do to address these challenges. So it's still emerging, but, quite a lot to be done.
Yeah, thanks, Alex. Good to hear that you're kind of monitoring this, and that there's some support available in terms of TA and others, other things to address some of these weaknesses. Yeah, indeed, that fair pricing one is one that we're hearing increasingly about, and knowing that companies are really squeezed, knowing that they're serving low-income people who are extremely price sensitive, yet at the same time need to be moving towards profitability as well. And trying to get that unit economics at a point that is fair and sustainable is I think a tricky area that's I think going to require more data collection and benchmarking. So yeah, I think that's an area that we're looking to do more on as well. Yeah, fantastic. Maybe just to wrap up, Alex. So we've got the pilot for these three for the three pilots of the third-party assessments, and we're looking to kind of offer this as a commercial service going forward. And I think that it was Lion's Head that kind of suggested a model whereby it's kind of investor pays but subsidized by the some of the donors too, while we're still in this stage of kind of learning and development to kind of make sure that everyone gets the value for money. How do you see your kind of fellow investors in the industry being motivated to buy into and invest in these assessments? And do you think that you can stand with your hand on your heart and say that it's value for money for their investments?
100%. Yeah, so it's one of those things that the result sort of speaks for itself. And I could hear again when Sarah was speaking, I could hear that when customers are treated well, when the consumer protection principles are really adhered to, there is good repayment, and good repayment translates to good financial performance, which translates to good investor return. So it all goes back to the investor. So the more investors embrace this and put their money to work supporting this, it all goes back to good returns for the money that they've invested in. So I think it's a bit of a no-brainer, and we'd be happy to rally all the investors that we work with to put their weight behind this. And one of the areas, sort of reiterating a point that I made earlier, it's right now it's still voluntary, but once we have this third-party assessment, we would really love to have it sort of mainstreamed, where it's part of usual due diligence, where we have it as a risk indicator, and sort of it influences the pricing of the products, of the loan products that we have. So I think it's good that it's happening. For sure, it's going to have a lot of investor buy-in, and eventually, I think it's going to be mainstreamed into the way investors deal with borrowers and companies.
Fantastic, thanks, Alex. Great that we've got an advocate and a champion amongst us. We'll take you up on that offer offline. Yeah. Sarah, maybe I can ask you to close with any remarks or advice for companies that are thinking about doing a third-party assessment.
Yeah, I think one of the things that we were a bit skeptical before we went, we agreed with third party because, it's like an audit. But one of the things that we've seen a lot of benefit, why, is because the fact that, there are different layers of management that the third party had to talk to. So what that drove the idea that the consumer protection is not a risk issue. It's not a management issue. It's an organizational issue. It's something that everyone in organization needs to really, put their hands on or just be part of. So I was very happy with that, because now it has driven even further awareness on the different layers of management as well as different departments. So that's a great thing. The other thing is that, usually when you check yourself, you'll always score yourself based on how you want to feel. You just want to feel good, you'll score yourself well. But when you do a third party assessment, then there are realities that come in. And these realities are usually just make you to see areas of improvement that, objectively, they would be subjective when you're doing it yourself. So I'm thinking that in Greenlight, what we used to do is to try and have quarterly, like we used to have biannual review of ourselves. But when we did the third party, then there were issues that were brought in. I'm sure one of them maybe would be, when Lucia was talking about governance, I know that maybe that's an area that we need to really maybe work on, based on how the interactions were. There are other things about business continuity that, it's something that you always have at the back of your mind that, we know we are covered, or we know in our cash, we have cash flow, or we have capital adequacy. And so things will work well. But, with Corona, you never know. So some of these things, we start need to think about them in terms of those aspects. So I think it's a very great, it gives us a great opportunity to understand where we are not working well. And any other company that is getting into this, would like to do this, I think it would be a great thing for you. Just like we do financial audits and we know where to improve, I think this is also another aspect that we can work on. And also for risk managers like me, it just gives us another way to check out things. We can't check out things completely. So it adds value to the way we check things and give us a certain aspect. And one other thing also that they brought to our attention is that most of the times when you do periodic checks, you do them according to, for consumer protection, it's not that important. But from the discussion, it's something we should even do quarterly internally, so that we continually check that these things are, the codes are adhered to, the principles are the people are obliging to them. So I think that is something that we really benefited from this interaction. And I'll urge my fellow, players in this industry to actually embrace it.
Yeah, thank you, Sarah. Let's take that message and go to more companies and more investors. Cool. With that, it's time. I think if anybody wants to join the closing plenary on the other line, it's now is the time. So thank you very much to Sarah. Thank you very much to Alex, Lucia, who's moved on, and also to the e-MFP team for giving us this platform to talk about consumer protection in the off-grid solar space. If anybody wants to reach out now or afterwards, please check out gogla.org and we'd be happy to connect. Thank you very much and good evening.